Hey, this is Matt from InvestiQuant. Today is Tuesday, August 3, 2021. Yesterday was a weak day for the markets. So the markets gapped up, and after trying to go higher, they failed and ended up making their way lower throughout the rest of the session, closing down at the lows of the session. And we had what's called a bearish outside day, and that's a pattern where you have a higher daily high and a lower daily low and close below the opening print, making a red candlestick that has a higher high and a lower low. So that took place yesterday, and that's what we're going to be looking at this morning, is what has happened historically when you gap up following a bearish outside day in a similar market environment. So I'm going to set this up. I've got all four instruments selected here. The setup is based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading higher in the overnight session, so I'm going to add that piece of information by clicking on Gap Up in the Gap Direction category of the Opening Filters library. Next, I'm going to go into the Price Patterns library, and I'm going to say that yesterday was a bearish outside day. So I'm going to use this Candlesticks category here, go down to the bottom, and get Day After Bearish Outside Day. Let me hit equals there to add it. Next, I'm going to go into the indicator section, put us in a similar market environment. We did still close above a 10-day moving average as well as a 200-day simple moving average. So let me get both of those selected, and now I can click View Results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time when you gap up the day after a bearish outside candlestick pattern. This is taking place in a bull market environment. So historically, we've got 72 samples in the S&P to look at. We've got 87 in the NASDAQ, 55 in the Dow, and 62 in the Russell. And the win rates on these are a little mixed, but they're all north of 50%. So the S&P coming in at 58%, the NASDAQ 54%, the Dow is the strongest of the group at 71%, and the Russell 56%. So all of those at least mildly favored. And if we look at the average win and average loss, 3 out of 4 of them have larger average wins as well. So for the S&P, that has a larger average win compared to its average loss. That's also true for the NASDAQ, and just slightly true for the Dow. The Russell is the only one that is not in the same category here with a larger average win. You can see the loss there is quite a bit larger than its average win, but 3 out of the 4 have larger average wins compared to their average losses. All 4 of them have win rates that are north of 50%, and some of those quite strong. If you look at the Dow, here's the Dow equity curve. That one's the strongest of the group with the highest win rate here at 71%, so that one's pretty strong. But in general, this day has been a little bit more favorable towards the bulls, so hopefully you found that helpful. Good luck today, and we will see you next time.